Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. What an honor to have Michael Spence and the laureate and Richard Portis of London Business School talking about John Hicks. And long ago, there was a thing that was invented called the Hicks-Hansen model, which now we call the ISLM model. And the bottom line is the financial media completely focuses on financial LM dynamics, money, this, the interest rate, what's inflation can do. Oh, yeah, there's an IS curve, which has to have the real economy on it. Rich Clarida, is this Fed completely riveted to inflation, or can they perchance look at the American labor economy?
If you'd asked me that question, which I think you did 2 years ago, I'd say they're focused on inflation because it was too damn big. They're saying, and I believe that is two-sided. I think if we did see a sharp slowing in the labor market, they would respond because inflation is now close enough to target. They can afford to be flexible. 2 years ago, when inflation was 6-7%, no. With
the fancy PhDs, all from Columbia at the Eccles Building, when you quote-unquote focus on labor, by definition, you're ex post. You have to wait for the labor economy to break. You can't anticipate it at a given central bank.
That's a very fundamental question because ideally central bankers, including on my own research with Gertler and Galley, in a perfect world you would anticipate. If you saw the labor market slowing, you try to get ahead. That's forward-looking monetary policy. As I learned in practice, however, the economy is always changing, and what was a good model 5 years ago may not be a good model now. So there's a real element of risk management as well. But I will tell you, a good example of that, Tom. During my time there, the models were saying, you guys are got to keep hiking rates because the unemployment rate's at 4.2%, and our models say inflation's coming. And Jay Powell and I, the committee, didn't see inflation. So we didn't hike rates in 2019. In fact, we cut a little bit so the economy could keep going. So there's risk on both sides, and I think good monetary policy needs to be nimble and assess that.
Central bank inflation targeting. Richard, this is something that, we felt, at least in emerging markets, that central banks had found religion. And here we are, and we're seeing central banks cutting in the face of a Fed on hold. And my question for you is, how long can that last?
This divergence. Certainly, I think there was some talk at the beginning of the year other countries would not even begin to cut until the Fed did. I never believe that. And I see we have already seen Sweden. We've seen Switzerland. We're almost certainly going to see Madame Lagarde and the ECB tomorrow. So I think certainly central banks can get those rate cuts started. And I think they could proceed much further than the Fed if their inflation data supports that decision. I think the challenge right now in Europe and the UK is the inflation data at best is moving sideways, and some measures is moving up. So that may limit the number of cuts they get in this year, not because they're focused on the Fed, but because inflation is not cooperating.
You just hit the nail on the head. Look, inflation is not cooperating right now with the ECB, and Madame Lagarde this is an interesting experiment, Tom. Can the ECB, it's 25 bips. What are they going to cut the depot rate to 4.75? Is that really going to juice growth in the Eurozone? Do you think that's enough? Do you think they're going to have to continue to go more, or can they cut, pause, and wait and see what the Fed does?
My guess now is that they will pause in the sense I don't see them moving at the meeting after the June meeting based upon the data now. In fact, maybe just to venture, there could be a little bit of seller's remorse because they really signals this rate cut beginning in March, and I think they're going to get it in, and I think it makes sense to get it in. But I would not extrapolate from this that it's going to be every meeting. I really do think, and I saw a wonderful speech that Madame Lagarde gave at the ECB Watchers, where I also spoke in March. It was one of her best speeches. And the message I got from that is she is very data dependent. And if the data doesn't cooperate, I think that's going to be a factor.
In her Jackson Hole speech, which we covered, was the same idea. Okay, we're data dependent, but let's have a longer vision. Richard Clarida, I have to have a nerd book of the summer, and it's Adam Posen's fault. We'll blame him, out of Peterson Institute.
Yeah.
Maurice Obstfeld and Doug Irwin talking about trade, talking about what's out there. And all of this, and we're going to get Brad Setzer in here, but it's
Brad's
the idea
great,
of deglobalization. The Fed's got to worry about the rest of the world as well. Do they work within regional trading blocks now, or do we still have a vibrant trade economy that can be part of our growth?
Well, obviously, globalization, I think it's clear, has peaked. And so the real question for the next 5, 10, 15, 20 years is what does onshoring, friendshoring, supply chain rethink, how does that translate? But I will say it's very relevant, Tom, to monetary policy, because in the 30 years before the pandemic, globalization made the Fed's job easier because it put downward price pressure on goods and in labor markets. And if it reverses, that means at the margin, the Fed's job is harder.
Right now, and this goes to the meeting next week,
Yeah.
you've got a partition of domestic final sales, which are actually pretty good. But I'm sorry, you bolt on a few other statistics, including trade, and it's a sub 2% economy.
Yeah.
Which is it?
My own sense is that we're heading down to around a 2% economy with a risk that we could overshoot in the other direction. I think it's too soon to tell, but some of the data, including the Bloomberg Surprise Index, it has moved into negative territory. We saw Atlanta Fed mark down from 4 to 1.8 in the last couple of weeks. So bears watching.
Rich, we talk about data dependence here in the U.S., and we have two big data points coming out. We have the ISM services coming out tomorrow and then followed by payrolls, but I think it's those subcomponents. So I'm asking you, what are you really looking at within the data? You're looking at prices paid, new orders in the ISM data. Are you looking at, labor force size, average hourly earnings? I mean, what are you most focused on over the next couple of days?
At some level, the flip answer would be all the above. Certainly when you're at the Fed, you are looking at everything. But I would say that if I had to prioritize, I'm focused more on the cost side of the economy right now, in the sense that everyone agrees that the labor market needs to adjust to be consistent with the inflation mandate. And I would say that the numbers there are encouraging. We've seen a big deceleration in wage inflation. That may create some political problems for the incumbent, but from the Fed's point of view, it's moving wage inflation in the direction of consistent with price stability, unlike, for example, what we're seeing in the Eurozone and the UK. So I think labor market and the cost side of the economy is what I'd be focused on. I think the demand side will take care of itself.
I'm out of time. Can you come back?
Of course.
There's a
Just
Fed
don't
Day
leave.
next week. If we can get you on for Fed Day, great.
Stay for
Richard
lunch.
Clarida, thank you so much. The former Vice Chairman of the Fed. I can't say enough. Just heard Tom Porcelli of PGIM mention the QCEW. Chew on that. It's some obscure labor report that only Anna Wong would study, and single-handedly, Dr. Wong of Bloomberg Economics has changed the zeitgeist, turned it on its head in the last 24 hours. We report with Anna Wong on a 1 million overshoot on the job economy. The numbers are going to be much lower, much more tepid. Anna Wong, congratulations on forming the zeitgeist globally in the last 72 hours. Is your report in the revisions to come of less job creation enough to change the Fed now or September?
Well, Tom, it really depends on when the true numbers is released, and the first hint that the Fed will have of the entire revisions covering April 2023 to March of 2024 would be just 2 days before Powell's August Jackson Hole speech, and in that report we expect about 1 million downward revisions. And I think that would be enough to question and challenge their belief so far that in fact, the labor market's tight and they have time to wait until things actually weaken. In fact, things have been weakening. So I think it's a perfect catalyst for a September rate cut.
Around this is a birth-death model. I'm going to suggest, Dr. Wong, you're not the only fancy, smart person who's figured this out. Would you suggest the staff at the Eccles building has figured out much the same as you've written about for Bloomberg in the last 24 hours?
Well, in the FOMC minutes for the last meeting, we saw that Fed staff is currently forecasting unemployment rate to fall this year. And the kind of models that can generate a prediction of unemployment rate falling this year, rather as opposed to rising, is a top-down model using, VAR, conditional forecast, which is far, far away from the approach that would show a 1 million overstatement of non-farm payrolls. So it seems to me that the direction that the Fed staff is focusing, putting a lot more weight on, is taking data at face value and plugging it into a top-down model, as opposed to really questioning the measurement issues that's plaguing the
she was with Steve Levitt of Freakonomics in Chicago, and Dr. Wong took Manners 101 in economics. She's not going to throw the Fed under the bus, but she's saying do some bottom-up work.
Well, Tom, for our audience, we have to define what the QCEW is. It's the quarterly census of employment and wages. It really does kind of crystallize the difference between the establishment and the household surveys. Obviously, non-farm payrolls, Friday's print is based on the establishment survey. Anna, 1 million jobs? Are you telling me that the establishment survey has been overstating the...
That's 80,000 a month.
I mean, that is nuts, right? Talk to us a little bit about what that means, and certainly what that means for the Fed calculus.
Yeah, Tom, especially you are very close to economic history, and in economic history, there's this concept of creative destruction, and during cyclical downturns, and that's what we were seeing last year. Is that the jobs closures has surged significantly, and also new business formation has slowed also. So, however, BLS is still using these lagging predictions of firm closure and opening, because typically in normal times, little firms opening and closing generate a lot of churn in the labor market and accounts for as much as 40% of the total monthly employment. But in a situation, this cyclical turning point like last year, what we're seeing now in the data, in the QCEW data, is that in fact now we know that firms are closing, and as a result, that's produced this huge overstatement in non-farm payroll. As long as they using those.
Damien, jump in here. I can't state enough the importance of Dr. Wong's work in the last 48 hours. It's turned the industry on its head.
Tom, I mean, can you imagine the FOMC making decisions with the Fed funds rate based on data that is basically they're disregarding, that's wrong, that they basically need to revise based on revisions? I mean, that's what we're talking about here. Anna, I'm looking at your Fed policy rate forecast going out to the third quarter of 2026. You're looking for a 3% Fed funds rate. I mean, forget about how we get there, but a 3% Fed funds rate. I mean, does something have to break in order to get there?
I'm assuming you're looking to 2025. So for this year, we're still expecting 50 basis point cut, because I think it takes a long time for the Fed to realize and take on board the data, because the Fed said they're data dependent, and the danger of this data dependency is you have to wait for the revisions, and it wouldn't be until early 2025 where they would get the real data based on QCEW benchmark for 2023 and early 2024, and it will be until early 2026 where they get the full year of 2024 revisions. So it could be that the sharp cuts will happen only in 2025.
Anna Wong, thank you so much. Joining us now, not wearing Dior in London, is Leslie Vinjamuri. I'm dying to talk to her, to bring over what we just saw in India over to Biden-Trump November of this year. Leslie, I am sobered over, and I understand there's a caste system in America, in India, and there isn't a caste system in America, but there really is. But the poor of India, boy, did they speak in this election.
Yeah, it's a very surprising result. We still have Modi, bound to run the country for a third term, which is a very significant result. But yes, not what people expected. And by all counts, it's really what we see in the U.S. too. People voting on the basis of how they on daily life, economics, prices of food, job opportunities.
Right.
India has a very large youth population, high levels of unemployment amongst young people, and problems when it comes to, those level of jobs, education, and health. And so that is a signal. And we will see an India in which Modi has to govern slightly differently than the last several years.
Leslie, you staggered through Wesleyan before you did LSE, and you learned humility about polling. Does Leslie Vinjamuri trust the polling in America?
The polling is fine for what it is, but don't draw a direct line from polling to whether you or I or our children or our neighbors or our friends get up and vote. And we all know that this, more than anything else, is an election that is about, are they enthusiastic? Are they passionate enough to either vote for or, in effect, vote against Biden and Trump? Will they get out of bed? Will they vote? And especially, will those voters that matter in those states that matter vote? So sure, the polling's, it's interesting. Not a lot more than that at this stage, this many months out, and it doesn't tell us what we need to know, which is how inspired, how passionate are people. So the things I would look at is young voters in swing states. Are they going to be mobilized to, in effect, vote against Biden because of the war in Gaza? Do they care about climate change? Therefore, they'll turn up for President Biden. How much are voters in the manufacturing sector still feeling the pressure on a daily basis of inflation? That would drive them to, be enthusiastic to vote for Donald Trump, not for any rational reason, but as a vote against Biden. So there's lots of uncertainty here. We kind of know what matters, but the polling doesn't really, it gives us something to talk about for many, many months. We have a long way to go.
Well, yeah, Leslie, I'd love to ask you about these elections in India, South Africa, and Mexico, but you went to Israel, so let's just go there. Israel Hezbollah rhetoric is heating up. Benny Gantz saying Israel will return residents to the north by step one, either through a deal or escalation. We've got wildfires in the north due to Hezbollah drone and rocket attacks. More than 60,000 Israelis remain displaced. Talk to us about what comes next in Israel.
Yeah, there is not a clear path forward in this war. We're seeing Netanyahu doubling down on the war effort in Rafah, to the great backlash from much of the rest of the world. We're seeing more pressure on President Biden and others to really try and get Israel to exercise restraint, but not a lot of that happening right now. We have this wild card of the International Criminal Court that's likely to confirm an arrest warrant on the Israeli prime minister, which again, from all counts, is actually leading many Israelis to gather around, who their prime minister has not been very popular, but this is actually working against that. So all sorts of wild cards, but it's at the moment, there is no clear sense that a deal is going to be delivered. That the war is going to result in what everybody thinks needs to happen, which is a two-state solution. And there is that concern about what's going to happen between Israel and Hezbollah and Lebanon.
Leslie, I may not think this way, you may not think this way, but from where I sit, most of America feels that a vote for the Republican Party for Donald Trump is a vote for Israel, and vice versa. A vote, for the Democratic Party is a vote against Israel. Is that something? Is that real? Do you believe that? Is that the way the U.S. Election is headed right now?
I don't think that young voters see that. They see a president in President Biden who's been very pro-Israel, and a party that's very divided. Certainly has a progressive wing that wants to move in a different direction when it comes to America's support of Israel. But that has not been, just in terms of America's military support of Israel. That's not at all been the case. So I think that the story is much more complicated in terms of whether the Democratic Party, if President Biden were reelected, will pull back some of that support. Very hard to say. I think in the medium term and a longer lifespan, America's support of Israel is likely to diminish, but not in the near term, not in the.
Dr. Vinjamuri, thank you so much. Leslie Vinjamuri with us this morning. Greatly appreciate it. Lisa Mateo What do you have?
All right, we're starting with the New York Times. I really need John Tucker for this one. Sources saying Governor Kathy Hochul pushing to delay congestion pricing. Now, it's slated to start June 30th. Hochul, though, thinks that congestion pricing is good for the environment. Here's her concern, is that the timing was less than ideal because it's going to hurt the city's economy, which is still recovering from the pandemic. She wants to replace it with another revenue stream. She's considering proposing this tax on New York City businesses. That would need approval, though, from the New York State legislature.
I was thunderstruck today driving in. The Bentley's in the garage, so I had to come in. I'm going down Lexington Avenue, which I never go down. The number of stores, businesses, whatever you want to call it, boarded up. Yeah, that's nuts.
Still.
Well, they have a shortfall of the city has a shortfall of $1 billion a year, Tom. So it's got to come from somewhere. If it's not going to come from drivers, it's got to come from businesses, I guess. But I mean, look, selfishly speaking, I am not a fan of this congestion tax at all. So,
Lisa, what do you think? I mean, my answer is it's loaded up on the FDR and the West Side Highway. I don't know.
I'm not a fan of the congestion. I mean, granted, I'm coming from Jersey, so I'm one of those. There's a lot of lawsuits and everything still going that could delay it as well. But I'm not a fan of it.
We'll have team coverage with our surveillance congestion reporter, John Tucker. Look for that through the week. Next.
All right. We told you about Boeing Starliner launch today. Okay, so now SpaceX also getting a launch license. So it would be its fourth major test flight. It's from the FAA. They granted them the license. So SpaceX plans to launch Starship as early as tomorrow. That's from the company's Starbase facility in Texas. Bloomberg will carry that live too when it does happen. But it's kind of this next step in launching SpaceX's, future satellites, taking humans to the moon, possibly to Mars too on top of it. But this will be their fourth flight for the.
And Boeing is this morning just before 11 a.m.
Correct. Yes, 10:52 is for Boeing. So a lot going on with space travel.
Yeah, it's just an interesting hybrid. We will see.
Blue Origin, Bezos, the whole smash.
Correct. Yeah.
We'll have to see. Next.
All right, we go from space travel to airline travel. All right, you have these elite flyers.
Probably riskier, but
they're going crazy
Charlie
for this.
Pellet.
They have an exclusive airline status, okay? So it's like this semi-secret status.
Yeah, Damien's in it.
Damien's on it.
I'm trying to get in it.
He's trying.
I can't. I've spent many an hour on the phone with Delta trying to figure out how to get on Delta this or Delta that. Yes. And, I get a lot of pushback everywhere. I don't know how to do it.
Yeah, so it's United's invitation-only global services, Delta's 360, yes, and American's concierge key, okay? You get a lot of perks. Do you want to hear some of them?
Yeah,
please. You get customer service on speed dial.
You get customer service on speed dial. What a perk.
Flight rebooking before you even know there's a problem. Lounge access, priority for upgrades, and listen to this one, chauffeured drives in luxury cars to the gate if you're running late.
Virgin was doing that years ago.
Is Penelope Cruz going to be there to hold our hand as we
I don't know. I know you would like that, though.
My basic take is it's out of control. I did a fancy private trip. The lounge was so packed, I had to stand at the bar going out, and coming back, I had to do the exact same thing. There were no seats in the lounge. The whole thing's. They got to blow it up and start all over.
It's so secretive because
what do you think,
people are asking how much it's going to cost.
I fired my present airline. I'm not going to say what it is.
There are these new airlines that are popping up. I forget the name of it, but it flies out of Westchester. They only fly to a few designated locations, and apparently it's like flying private. And you go in through a part of the airport, not the public part with all the mishigas. You go in through this little private entrance, and it's supposed to be really nice.
Okay, next,
but you got to spend a lot. You got to spend.
You got to spend a lot.
Online forums are saying you got to spend like $50,000 plus. A year in flights. All right, the last one we're going to talk about is Disney. So they could be set to invest billions of dollars into its Florida theme parks if this new development agreement is approved for today. We all know about the back and forth taking place between Disney, Governor Ron DeSantis' appointees. They've agreed to end that legal fight, right? But today, 5 DeSantis appointed as supervisors, they're going to oversee the Disney World who oversee that Disney World district. They're going to vote today. So we'll see. The results could happen, and if it does, $17 billion investment into its Florida parks. It could open the door to another theme park at Walt Disney, 2 more minor parks like water parks, raise the number of hotel rooms on its property.
So it's like, I'm confused. Is it a new Disney World, a bolt-on Disney World?
It's kind of giving it a boost. They want to boost up. Remember, Paul's always talking about this, how, we talk about the streaming, but he's like, it's all about the theme parks.
Do you do this, Damien?
Lisa, Tom loves Disney World.
I've never been.
He goes all
I went there to give a speech.
You stay at the Caribbean Beach Resort or is it Animal Kingdom Lodge? Come on, tell us the truth. He's always there.
There's alligators. I'm not going down there. I mean, Anaheim I'll go to, do the little teacups but essentially they want to make Disney World bigger.
They want to make it bigger. And this is specifically for the Florida theme park. Okay. So they're going to increase even retail space, restaurants increase that by 20%. But here's the thing, Disney does have to donate up to 100 of its acres for infrastructure projects controlled by that district. So that's kind of what they're getting up to.
Lisa, Mateo, thank you so much to the newspapers. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.